Hello everyone and welcome back to Sudden Wealth. I hope you're having a very good start of the week. If you do enjoy the content, please consider dropping that like and subscribe. That's the only thing that I ask. I don't sell you courses, don't sell you private groups, don't sell you discords. And actually, I've been quite right in my expectations on the market movements, and I do it all for free. Now, gold market keeps falling actually quite aggressively. So Peter Schiff might be breaking down his house once again. Where is the gold $3,000 imminent? As I've told you, that's not going to happen so soon. But he needs to sell his gold. Silver is also collapsing. The gold miners, where he said back in 2021 that he had early 2022 that he had half of his wealth in gold miners, and they've done nothing but go down. Well, I guess it's not going very well for him now, is it? Nasdaq is still slightly green at the time of this recording. Maybe it will end up flat. All of this is driven once again by the bond market getting annihilated again. So Stephen Van Meter and Harry Dent are also having the time of their life. But in all seriousness, TLT, the bonds are the key. That's why you see the Russell 2000 dropping the most. Why? Because if interest rates keep spiking, the bonds that the banks hold get to be worth less and less. So again, the fears around the regional banks return. Also, one thing that is important to note, October sometimes tends to be a very volatile month in the stock market. And the reason for it is one of the what is called the 2 months of crashes. So if you look in the past, you had the Great Depression, big sell-off was in October 1929. In 1987, the Black Monday, when the stock market dropped 22% in one day. For you to have an idea of that impact, in 1987, 1% or 2% moves in the market were something ridiculously volatile. I mean, it was something that would happen maybe 5, 6, 7 times per year. Nowadays, it's much more common, but in the past, it was extremely rare. So to have a drop of 22%, so basically an instant bear market, was almost never seen before, and also happened in October. And the big sell-off of 2008 started on 29 September, and basically, but the big chunk was in October. And I do believe the Nasdaq crashed in the tech bubble, where the Nasdaq started its 2-year decline by 83%, started in March, which is also considered a proper month for crashes. But in any case, I mean, you see Great Depression, financial crisis, and Black Monday all in October. So October always has this fame of a crash month. Now, crypto, in the beginning, it was a bit more resilient. Bitcoin was comfortably above 28,000, but also Ethereum is also down almost 5%. So big sell-off day. I've told you many times before, the bond market ultimately leads all the other markets by its size and importance. However, crypto, I think we are approaching the beginnings of the bull market. However, there's always this fear around the debt market, the bond market, that can collapse everything, I mean, to be honest. And what I wanted to discuss also is a bit around the Ethereum spot ETF that have been filed. And I'm starting to get convinced that not the approval of Bitcoin ETF, but the approval of Ethereum ETF may mark the highs for the next bull cycle. So there's going to be a time, and I'm already discussing this because it's important to note, there's going to be a time when I'm going to start saying that I'm starting to sell my crypto bags. Now, this will be in the heart of the euphoria period. This will be when everybody says that this time around there's not going to be a bear market, that crypto will never have a bear market again, that the crypto will solve every problem in the world, that basically this time is different. This time with institutional money, there's no more selling off on crypto, blah, blah, blah. And when I hear things like that, that triggers my alert into, okay, it's time to de-risk because this thing is about to top. The thing is, when I say that, probably I'll be the most hated person on YouTube because nobody wants to be told that the party is getting to an end and it's time to go and have an hangover when everybody is drunk and happy, celebrating the never-ending bull market, in their opinion. But in any case, Ethereum spot ETF, I did expect it, the rumors to come at the end of the cycle. I was positively surprised to see the increased number of applying for the Ethereum spot ETF. So they are front running even, I don't know what happened here. They are front running even the Bitcoin ETF to go straight and get the Ethereum one as well. Now, Pulse Chain, PulseX remain fairly strong, which is good for me. But yet again, my targets are 2024, late 2024, beginning of 2025, and that's what I'm looking at. September came to an end, and I guess that we didn't have a September market. As I mentioned, when everybody is looking into the same thing, so everybody's expecting a September, it becomes less likely to happen. And unfortunately, I am tired of seeing Pumpoctober, up October. October is going to be the start because October is always very positive for crypto. I hope so, but unfortunately, my experience is whenever I see this kind of over bullishness, typically is a very bad sign because it ends up as everyone gets crowded into one side of the trade. Then what happens is you many times get the opposite side because the people that actually control this market knows what everybody is expecting. And regarding the debt market debacle, because that influences all the other markets, yes, there's going to be a time where the Fed will intervene. I don't know if they are hoping that inflation numbers come a bit lower before they do it, but it's becoming unsustainable and it's a matter of time before they need to pull the plug on the whole cutting rates and they will start to buy bonds again. Then they will probably give it a fancy name, something to the nature of, I don't know, Operation Twist, Operation Freedom, Operation, Operation Independence, Operation Reliability of the US, whatever. They'll give it a stupid name, but in practice, it will be pure and simple money printing, QE, maybe targeting bonds more on the longer tenor side rather than the short tenor side, but we will see. In any case, guys, stay tuned. Thank you very much for your support. I'm planning a live stream Wednesday or Thursday. Leave me in the comment sections which time you prefer. And don't forget, if you enjoy the content, drop that like and subscribe. So thank you very much, guys, and I'll catch you in the next one.